Equity Group Holdings booked 779.2 billion shillings in net loans, up 3% on the 756.3 billion shillings recorded during a similar period a year ago. In addition, the lender increased its portfolio in government securities by 21% to 473.2 billion shillings. From this and other revenue-generating streams, the lender made 43 billion shillings in interest income, which represents a 33% increase.
When we look at the whole balance sheet of the group, we see momentum. We are a liability-led organization, and we see customer deposit growth. Treasury functions has become very important because of the size of the balance sheet. Nearly 30% of the balance sheet.
However, increased lending came at a cost, as the lender was forced to offer a gross loan loss provision of 6.1 billion shillings after the group's non-performing loans ratio hit 13.2% from 11.7% a year ago.
Last year, we said interest rates had peaked, and truly they had peaked, but they have remained elevated at high levels.
The increased loan loss provision partly drove up a total cost to 29.2 billion shillings, up 28%.
As you've seen on a quarter by quarter, we've continued to increase our provisioning buffers. As we've mentioned, that doesn't mean that our overall non-performing book has slid.
Equity Bank Kenya contributed 35% of the profit.
We will be driven by the markets, and therefore we would expect Kenya to continue competing with markets like DRC, Tanzania in terms of contribution to our balance sheet as well as our revenue.